Hello and welcome back to ATA Live. This is episode number 19, I think it is. ATA Live, the ATA standing for Australian Taxpayers Alliance, who allows me to put this together and pays for the overheads to keep us rolling. I am one of your hosts, John Humphreys. My co-host is Gene Tunny from Adept Economics. How you doing, Gene?
Good, John. How are you?
Top of the world. Another beautiful day in paradise here in sunny Queensland. So the preliminaries. This is a live stream simulcast onto Facebook, YouTube, and X. You can find it on the Australian Taxpayers Alliance channels and my own channel, my personal channel on X, at John Humphreys 99. Wherever you're currently watching it, could I ask you to give it a like, give it a share, get it going around the algorithms of the social medias, and whichever one you're watching on, when you have a moment, please duck onto the other social medias. Go and give us a follow on those as well, so we're able to keep in touch with you and you can see what we're up to. Now, this is also a live stream that takes viewers' chats. So if you are watching along, you agree, you disagree, you have a question, a comment, you want to throw a tomato, the tomato won't get through the screen. Everything else can. So if you write a comment, we can then bring them up and engage with you if they're interesting, provocative, or for any reason, really. So feel free to get in touch. Please like and share. That's the preliminaries out of the way. Let's talk about the world of economics and politics in Australia and around the world for this episode over the last week or so. And I'm going to start with a topic that we wanted to cover last week, but we ended up having quite a fun conversation with Cam Murray about all things superannuation and savings. And if you haven't seen that episode, I encourage you to go back and have a look because it was quite interesting. We butted heads quite a few times. So we do a bit of a deep dive on the nature of tax theory and savings and a bunch of other issues that ended up coming up. But that means we didn't get around to talking about the Queensland and New South Wales budgets that just came out. So I know everyone at home, you're fascinated. You find it scintillating to talk about state budgets. I promise you we won't spend too long on the topic, but it is something big that happened in our backyard and then the biggest state in the country. So it's worthwhile keeping an eye on just exactly how much our state politicians are selling out our future. Gene, you watch these things closely, especially in Queensland. What has the viewing public missed about these fascinating, quote unquote, state budgets?
Well, I think for both New South Wales and Queensland, we've seen a real difficulty of both governments to get on top of the pressures, the spending pressures, and to get debt under control. And I mean, in Queensland, I mean the government has announced that the debt won't get up to quite the level that it forecasts, and it's the horror story in the mid-year update when it came in and said, "Oh, look, the previous government left things in much worse condition than we expected. There was all of this unexpected spending." So it's not going to be quite that bad, but it's still a lot worse than we thought. It's around when the previous government was in power. So they're going to get debt up to around 210 billion or something like that. So, it's a significant amount of debt. And New South Wales, similarly, they're going to keep adding debt. They at least will get to an operating surplus by the end of their forward estimates period, if you believe their forecast. Now, there's some skepticism. I mean, essentially, the AFR, I think they ran a story on how, who believes this? There's these heroic assumptions about expenses growth coming down toward the end of the period, and Queensland budget has that too. So what you often see is that the expenses tend to be front loaded into the current periods, and then because that's when it's obvious they've got the spending pressures, and then they make these heroic assumptions about how spending's going to be. Spending growth will fall. It won't be as high in the future years, and so you can eventually get back to surplus. And there's a bit of skepticism about whether that'll occur in New South Wales, and probably we should have the same skepticism in Queensland. So I think in both cases you've got governments that, because of there's all the concern about cost of living, they're probably not willing, or they're reluctant to make the hard choices that are necessary to really get these budgets under control. So, for example, I think an obvious one in Queensland here is that 50 cent fares, the subsidy the increase in the subsidy to public transport, which is costing, hundreds of millions of dollars a year, maybe even, what is it, $500 million or something? I'll have to find the exact figures and put it in our show notes. But this is something that should have been easy to cut, okay? Because people were used to paying these, public transport fares. Our public transport fares really weren't that high compared with some other places in the world. I mean, you go to London, just look at what you pay to use the underground there. But this current government decided to continue this policy from the previous government, which the previous government couldn't afford. And I just can't understand that. I thought that would have been an easy one for them to go back on. But because of the politics of it, they were reluctant to do that.
The politics of that, you can see. I agree with you. They should have done the right thing there, but you can see the politics. Labor, quite Machiavellian genius, evil genius.
Yes.
Before the last election, introduced a bunch of big handouts that expired in 12 months, knowing pretty much they were probably going to lose. And then once they lose, the Liberals come in, and then they all expire under the Liberals' first budget, which would make them look terrible if they do the right thing. And instead, they haven't done the right thing. They've decided they don't want to look terrible, and they just locked in Labor's dumb ideas, which I got to say, just looking through the reconciliation tables, I think it's one of the most important tables to look at in any budget. And to their credit, in New South Wales, there was only about, for the next year, I think, a couple of billion. Now, they shouldn't be adding a couple of $1 billion spending, right? Especially they say that they're in deficits. They're in bigger deficits than they admit, because they report the dishonest operating deficit, which we've discussed previously. And debt's too high, and there's no reason for them to be. So they shouldn't be adding money. But marking on a curve, right? Marking on a curve, nearly every budget involves billions of dollars of extra spending. That's extra over and above the status quo. New South Wales only had a couple of billion in the next year, and only a couple more over the forward estimates. This Queensland budget had, I think, $5 billion new spending. Last budget to this budget decisions for the budget year, $5 billion. Queensland's got a smaller economy than New South Wales, and the discretionary new spending is higher, $20 billion over 4 years. A billion here, a billion there. Pretty soon you're talking about real money, but that is a lot of discretionary spending. And some of that's going to be that they just feel like they were politically pressured into having to continue to be Santa Claus to keep up the Santa Claus routine that the Miles Labor government had a year ago.
Well, I think a lot of it is that, John, because what the government claims is that the previous government didn't provision for spending that they knew they had to roll over or they had to renew. So spending on homelessness programs, for example. And so this new government comes in and then realizes, oh, hang on, there was nothing in the budget for homelessness programs. And then the now opposition is able to say, well, oh, you're not going to fund. Well, are you going to fund these homelessness programs? Oh, this,
I grant you that. So that explains half the discretionary spending. But that they claim to have caught up that in that MyEFO, or whatever they called MyEFO at a state level, like the mid-budget update they did at the end of last year. The discretionary spending, again, for this budget was $4 billion in the budget year.
Oh, so is this reconciliation table reconciling to the mid-year update, is it?
They do both, right? So they show you you the policies between the last budget and the mid-year, and then they show you the impact of policies from the mid-year to the budget. And there was what you say explains a lot of the out-year spending. A lot of the out-year spending was caught up in the mid-year update from last year. And that probably is accurately describing the cheeky games the Labor Party played. But this budget still included a lot of discretionary spending. And then I got to say, by the way, in the budget year, again, New South Wales has a bigger economy than Queensland, quite significantly bigger. Just they've got a lot more people, right? Not that they're more efficient, but put that aside. Especially with the state of origin coming up, I need to be careful. It's got the right colors here, everyone. But having said that, they've got a much bigger economy. Their deficit, their claimed deficit, using their incorrect, dodgy metric for the budget year is $3.4 billion. Queensland is 8.6. That's more than double the size for an economy that's significantly smaller. So that's a worrying size of deficits for Queensland, I got to say. Which brings us on to a topic you and I have discussed. Just like, go ahead.
I was just going to say, well, part of that is the the write down in the GST revenues too. So I guess they've been penalised by all of these expectations that have been placed upon them by and the politics of it, that they can't be seen to be like the Newman government. They don't want to get voted out after one term because they're seen as uncompassionate, so they're seen as nasty and mean. And so then there are all these spending items on social programs that they need to go along with, they need to approve for political reasons. So there's that. And there's also the write down in the GST revenue, because we had that big spike in revenues in 22, 23 with the high coal prices, and now we're getting penalised for that. So, yeah, I think they've had a bit of bad luck, and I guess some of it is their own spending programs. But yeah, it's
that's very true. There was a big write down in GST, and the whole way GST is done is ridiculous. We should actually probably carve out 10 minutes, some future episode, to just rip on the GST system. We have a system in Australia where if you introduce good reforms in your state and your state is productive as a consequence of your good reforms, the federal government will penalize you and take billions out of your budget, which is obviously a ridiculous set of incentives to provide state governments. But that still doesn't explain the discretionary, that $4 billion of discretionary spending, which is why I go to that reconciliation, because that's
that's $4 billion since the MIFA, is it? Since the mid-year,
and that's just in the budget year, right? That's just the budget year. That's just 25-26. So
but that's $4 billion reconciled to the MIFA figure, additional to the figure that was in the mid-year update.
Yeah, I imagine that's because of a lot of announcements they made to roll forward previous Labor boondoggles, and that hadn't been announced yet. And as they announced continuing them, that's when they would show up in that reconciliation. But yes, it was $5 billion total since the last budget, one of which was up until the MIFO, 4 of which after the MIFO. I'll double check that next time when you're giving your next discussion. I'll double check it and come back and show you the figures from their website. But can I say, this brings us on to a topic we've discussed a little bit before. State debt. So put aside everything there. That might have been a bit eye-glazing for the non-economists or people who don't follow budgets. The long and the short of it is New South Wales, Queensland, all of the states except WA have deficits, even using their dodgy metric, much bigger deficits using the correct fiscal balance, and large and growing debt. What happens with that debt? I mean, hopefully they just get it, become responsible and get it under control. Kumbaya. That's what should happen. If that doesn't happen, what happens to that debt? And I think, Gene, you and I have a slight disagreement about what the likely consequence of that is. So I say my position, and then you tell me why I'm wrong. I suspect when push comes to shove, the feds would bail them out, the federal government, which is why I think state debt should be all added together, added to federal debt to show the actual debt balance that we're facing in this country. But tell me where I'm wrong.
Oh, well, I mean, various people do that. I mean, Robert Carling at CIS, my colleague at CIS, does that from time to time. And I mean, it is a very high figure. Is it? I'm trying to remember if I saw actually, I better not quote it because I'll get it wrong. But we're talking over it must be $1.5 trillion now, the total amount of state debt and federal debt, if you combine them. I mean, it's getting up there. And I mean, I wouldn't want to downplay it. But I was asked a question by the AFR last week about whether all of this additional state debt will compromise Australia's credit rating. And I mean, it may well do that, a AAA credit rating. I mean, the ratings agencies might look at all this state debt and federal debt and think, oh, well, Australia is a more risky proposition. But the implicit, or what the AFR journo was assuming, is that the Commonwealth will bail out the states. And I'm just not sure that would happen, because if we go back to when South Australia and Victoria got into serious trouble in the early 90s with the state banks, we had State Bank of SA collapse, we had Victorian State Bank collapse, we had the Tricontinental debacle, all of the loans for commercial property that went bad. I mean, Commonwealth didn't bail them out then, did they? I mean, I think the states would have to bear the burden themselves. They would have to do unpopular policy measures. I really can't see the Commonwealth stepping in to any large degree, and I'm not sure they have to. The states they have the capacity to to get their budgets under control if they choose. The problem is that they just don't have the political will to do so at the moment. At least that's my take on it. Yep.
Well, I agree they don't have the political will. I'm not sure if they ever will have the political will. What it may come down to is what flavour of government is in power in that state and federal level at the time. Because, of course, as the budget starts to get away from them, they can't print money at the state level, but they can try to keep going into debt, take out more debt to pay for their last debt as interest rates go up, making their budget less and less sustainable. But they could try to push it forward another year by taking out really high interest rate loans. And then try to push it forward another year, just get to that next election. At that point, that government would be looking so terrible. A federal government that is politically aligned would have an incentive to maybe help them out. But I guess that's going beyond the economics of the situation.
I think that's the politics of it. So I think it's an interesting question. I just wonder whether the federal government would bail them out or would have to. I am concerned about the level of debt that we do have at a federal and state level, but I don't think it's yet at a level where it's unmanageable or we can't get it under control if we take, proper measures. So
I very much agree with that. The debt doomsayers, I think it's good to be worried about debt, right? So I don't want to get people not worried about debt, but we aren't at that point. It's all very reversible. Our debt right now, if we could pause it here, it is manageable. My worry with debt is not our current level of debt. It's always been the trajectory, the path we're on, because I'm not glimpsing any political courage necessary to ever put us on a different path. So I'm worried where this path is going to take us. But it's true, we don't want to be Cassandra about it. We want to be accurate as possible. The current debt levels, if we could pause them, manageable. But what comes next? By the way, I think I just brought up, see if I can see that here. Can you see that line, second from the bottom, total impact of expenses since the the mid-year budget?
That's a lot more than I expected. I should have looked at that table. That's incredible. So $4 billion.
And you can see at the bottom, the bottom is the combined, the total new announcements since the last budget. So you can see there it's 5, 5, 5, 4. So it adds up to 20 since the last budget. But of that, 7, 8, 9, so 15 of it since the last MyEFO.
And does it have the breakdown above? What's driving that?
This is all the. This is at the bottom of the list of all the policies. So I could take you to that, but it gets kind of long because this is like literally all the policies announced.
Yeah. So what are the big ones? Is it? Oh, okay. So all sorts of things. Yeah, I'll have a look at it.
Look through here.
I should have a close look at that a bit later. But that's a good find, John. I mean, that's extraordinary, isn't it?
Unfortunately, I mean, it is very disappointing. Unfortunately, it's not even that extraordinary for budgets. This is a very common thing where you find their amount of new spending. If you simply take out the amount of new spending out of a lot of budgets, the budget bottom line ends up looking a lot better. Like all they need to do is learn to sit on their hands for a couple of years in a row, and they could get our budgets back under control.
Yeah.
I'm trying to look for some of the biggest. So this is the subtotal for everything done up to the MyEFO. So you can see here, this is the changes.
Yeah. Gotcha. Okay.
Anyway, I can. This is on budget paper 4 in the Queensland budget. So budget.qld.gov.au, and then if you go to the budget papers, budget paper 4 gives a list of all the new spending announcements. So that is our depressing run through of the budgets. That put aside now, total change of pace. Unless you had anything else on that, Gene.
Not on the states. I think that was good, John. Do we want to respond to some of the questions in the chat first? Because I notice Lyndon has asked a question about the Tobin tax pros and cons. I think Lyndon might have asked that in a previous ATA live chat. Do we want to tackle that one, John?
I'll let you take that if you want. Do you have a take on the Tobin tax, or
not a well-developed one? I mean, it's a transaction tax, isn't it? So I think we probably wouldn't be supportive of it on that basis. I'm not sure we're taxing the right thing there. I mean, the idea is to throw sand in the wheels of international finance. So the whole Tobin tax idea is I think based on a presumption that a lot of the financial market activity is speculative and not helpful for the economy. I mean, potentially it could raise a lot of revenue, but then it could also discourage a lot of, but it could potentially discourage good financial market activity that is helping people diversify risks, that's helping them diversify their investments. So I find it an interesting argument, but I've never really been supportive of it. But having said that, I mean, we should remain open-minded, and it's the type of thing that we probably need to prepare for and do a bit of a deep dive, because it is based on a presumption that financial markets are essentially speculative. And I mean, look, I'm probably more sympathetic to the Tobin tax post 2008 than I was prior to 2008 financial crisis, but I'm probably still a bit of a skeptic of it. John, do you have any thoughts on the Tobin tax?
Yeah, I think 4 points. I was going to say 1 point, then 2, as you kept talking. Now I'm up to 4. Well, one is, I think, to do this properly, so this is a bit of a dodge, let's take this on notice and unpack it next week if you're up for that, Jim.
Yes.
Having said that, good. I do have 3 things to say now. Let's see if next week's me disagrees with the now me. So a generic point on tax, the economic inefficiency cost of a tax, the amount of destruction it causes, it's not just a binary, this tax good, this tax bad. It very much depends on the level of the tax. Just to use, now I haven't studied the efficiency consequences of Tobin tax in particular, but this applies to all taxes across the board. So use one that I have studied in depth, income tax. Now I would prefer we didn't have an income tax, but the truth is a relatively low, flattish income tax is not that destructive for the efficiency of an economy. Now, that's not what I want to be true. I would still get rid of it for other reasons, but that's true. A relatively low one, not that destructive. As the income tax rate goes up, it doesn't, the cost doesn't go up proportionally. So if you go from a 10% to a 20%, you don't double the cost. You like quadruple the cost. You go up to 30%, it's 10 times the cost. You go up to 40%, it's 100 times the cost. The efficiency cost of a tax is not just due to the nature of the tax, it's the rate. So again, this is a meta comment on all taxes, but it applies to Tobin taxes as well. We'd need to be saying what sort of Tobin tax or what rate of Tobin tax. And so that's the second point. The third point is, having said that, one argument against introducing a tax at a low level, even if it's efficient, is that once it exists, you got to look at the political economy of the tax. And that is that taxes have a natural instinct politically to raise to the level not where it's optimal for efficiency, but the natural inertia of political economy is to keep raising the tax to the amount that maximizes the amount of money that politicians can distribute before an election. So that's the natural incentive in the tax, which is why I would prefer we didn't have an income tax at all, even though a small one would be relatively efficient. And that's why we might want to be skeptical of the Tobin tax, even if you could find a low Tobin tax that wasn't too bad. Perhaps skepticism is still warranted. Final point, and that is, it's supposed to be a tax on speculation. Speculation is often seen as useless activity. It is not useless activity. It is information gathering. I mean, it is markets work because prices are, I don't want to say magical. It makes me seem I'm being like a bit woo-woo, but it's almost magical, the degree to which prices can wrap up so much information inside an incentive and transmit information across the world in a click of a finger, the exact information that's needed to the opposite side of the world, wrapped in an incentive to create the exact response that you want from that information. So the price system works remarkably well, but only when the prices are accurate, which is why you want competitive markets. Right? Competitive markets is what it sort of forces the prices to become more accurate. And that's what speculation does. It seems like a useless activity, right? They don't build a house, they don't provide your food. But what speculation is supposed to do is it's supposed to make the prices more accurate. Now, there is a utility value in that. So there is a disutility, a cost in getting the prices wrong. So it's worthwhile remembering that speculation seems useless, but they're not doing nothing. They are doing something that has value in the world. And just to show you why speculation should get the prices more accurate, if you're a speculator that buys high and sells low, then you're a speculator that's going out of business. If you're a speculator that buys low and sells high, then you're a person that actually decreases variance in the market, right? You actually create stability because you're buying when the price is low and selling when the price is high. But that's a very broad brush, hand wavy answer, but those are some of my short answers. But if you agree, why don't we come back and carve out 5 or 10 for Tobin next week?
Yeah, I think it's worth talking about, because we do need to grapple seriously with the whole financialization of the economy, so to speak, and the critiques of financial markets. And I mean, clearly the efficient markets hypothesis has some issues. I mean, given issues we've seen in financial markets, what we saw in 07 and 08 in particular. So I think I am a little bit more sympathetic to Tobin tax than I was prior to 08, but still, yeah. But let's talk about it. Let's thrash it out and figure out whether there might be a kernel of something good there. Because the point you make about the tax and the excess burden or the efficiency cost of a tax increasing with the square of the tax rate, isn't it? I think that's essentially what you were saying. I think that's the way they describe it. If you double the tax rate, you actually quadruple the cost. I think that's a really good point. So if you have a small tax on financial transactions, maybe the loss isn't that great. So let's have a chat about it. I think it sounds good.
All right, and Pete has another good question here, but I worry we're going to go short on time, so we're going to have to give Pete short shrift here. But if you have it is a good point. You want to compare the scariness of the debt depends on the robustness of the underlying economy. So it'd be great if we have a simple metric of productivity per debt. Of course, I think productivity is measured as output per hour worked, which is actually a flow, and debt is a stock. So it's a bit hard to have a productivity as a percentage of debt.
Yeah, metric, I mean, everyone just falls back on net debt to GDP or net debt to revenue. However, what you're missing there is what the debt was incurred for. And if you're getting a bunch of debt to help fund productive infrastructure or productive public works, I mean, maybe you can make the argument that some of that was good debt, so to speak. But what clearly is not good debt, I hate to use the term bad debt because that has specific meaning, but what is clearly not good to add to your, it's not really achieving any positive purpose, is the debt that's to covering your operating deficits. And we've been having these billions of dollars of operating deficits at state levels in recent years in New South Wales, Victoria, Queensland. And that's just borrowing to pay wages or to pay, to keep the lights on. And that is clearly not a good debt in any sense. So, I mean, generally we look at debt to GDP, net debt to GDP, compare across countries. On those metrics, we look pretty good, right? I mean, you compare us with US, Japan, where that's, in Japan, it's over 200% of GDP. US is over 100% of GDP. We're not, I mean, we might be, 60 to 70% of GDP, depending on what we count in the debt.
Oh, if you count the states, yeah. Okay.
Yeah. If we count the states too, or we're on the path to that. Go ahead, John.
Pete's question here has got me thinking, because I mean, debt as a percentage of the economy it's useful for know how big your debt problem might be, but it doesn't really tap into that productivity question, because your economy could be big and not growing at all, or it could be slightly smaller but growing at 10% a year. And an economy that's growing at 10% a year can perfectly easily sustain debt growing at 8% a year. I mean, your debt as a percentage of the economy would be going down year on year in that instance. So, I mean, that would be potentially a useful metric. I don't know if anyone actually keeps that metric, but percentage change in debt divided by percentage change in GDP might be an interesting indicator for whether the growth in debt is sustainable or not. But let's take that under notice as well. So here we go. This is a whole new segment where people can write in questions. We'll take them on notice and come back with a smarter answer next time. But we'll see how much trouble we get into.
I'll have to get those correct figures of now I'm wondering, what is actually if you look at the global debt database for general government debt for Australia in 2023, it's 49.01% of GDP. And over the next few years, that's going to go up even more, I expect. So, yeah, well, I'll get a good figure. I'll get a good estimate of where that's going to. So we've got all the information we need for that discussion. But yeah, that is a good question. Right.
All right, and good to have you watching along, Pete, as well. All right, so next topic. I didn't know a good way to segue. I'll need to get better at that, coming up with some witty way to segue the topic across. But that's the questions from the audience and the budgets of the day. But Gene, I believe you've actually put together some thoughts on the things that have been going on recently in America. And of course, America, everybody in the world follows two countries, their own country plus America. Of course, if you're American, that's only one country, which explains why Americans seem to know less than everyone else. But they've got a good reason, because we're all following Australia plus America. And what's happening in America's economy does impact us all. And what happens in their politics is, let's be honest, very interesting while Trump's around. But Gene, you've been looking at this closer than I have been. So I'll bring up your slide and you can take it away from here.
Yes. Thanks, John. So the big news today, or was yesterday in the States, and we learned about it today, is the employment data from. Is that coming up,
I
John?
apologize. I'm still trying to work this up. It's trying to get me to remove it. I don't want to remove it. I want to use it.
Okay. There was some employment data that came out from a payroll company, a company that provides payroll services in the States. And so they come out a few days before the BLS. This is ADP. That's it. And the BLS, Bureau of Labor Statistics figures, will come out tomorrow on Friday, and we'll learn what the official data is. But everyone was expecting the figure for the latest figure for June that came out of ADP to be positive, to be about growth in private payrolls in the US, so payroll jobs in the US of around 100,000. And it came in at negative 33,000. And so what you see there on that chart is there is a slight tick down. It's not a dramatic collapse, but people were expecting that line to keep heading up, trending up, but instead it turns down. So given that there's, what is that, nearly 135 million employed people in the US, 33,000, a drop of that isn't a huge deal. But it was surprising because all the market economists were expecting positive growth of 100,000. And this shocked Maria Bartiromo on Fox Business on her show when it was announced, because she was talking about how, look, the administration, the Trump administration's talking up the big, beautiful bill that's going through Congress at the moment, and there's a lot of excitement about the state of the economy. The Trump team are talking up the state of the economy, whereas the critics of Trump are saying, well, hang on, you've got this chaotic trade policy. CEOs don't know whether to invest or not. They're going to be waiting for some certainty in policy before they make big investment decisions. And so when this, but Maria Bartiromo, I think she's more inclined to be favorable toward the Trump administration. I think she's friends with Trump. And so she was hoping this would be a positive result, and it came out and she had to read the news. It was actually negative 30,000 or so. She was visibly shocked on air. So I thought, well, that's really interesting. What's happening there in the States? Is this a sign is this confirming the view that the erratic trade policy that we've seen since Liberation Day has actually led to, a freezing or a anxiety, a panic among US corporations, and hence they're not hiring people, they're not investing? Look, I mean, we've got to be careful reading too much into 1 month's data, of course, and we should wait to until we see the BLS data on Friday. But I thought this was an interesting data point nonetheless, and something we really need to talk about, because we really need to see what these tariffs are doing to the US economy. It's pushing up costs in the supply chain. It's causing uncertainty. It's causing some hesitation by CEOs. I've heard that from, well-placed people in the States. And look, this is one data point that maybe is consistent with that hypothesis. So that's why I thought this would be interesting to talk about, John.
Yeah, I believe the first quarter GDP stats for America were also negative this year. So that also lends some weight to the idea that, if nothing else, the markets are skittish. Look, I think a lot of it depends on where.
Yep. Yeah. Oh, I was just going to say
sorry, you go first. I'll be quiet.
Oh yeah, sorry. I just wanted because you mentioned the first quarter GDP stats. The reason they were negative to a large extent was because companies were getting ahead of the tariffs that were coming in. So there was a big surge in imports. So it's very difficult, in my view, to interpret that first quarter GDP and whether it, in terms of whether there's a signal that the whole economy is going to turn down this year if we're going to have a recession. But anyway, sorry, John, to interrupt you.
No, I agree, but that's almost certainly what it's caused by, and it's almost certainly why, if nothing else changes, there should be a bounce back in the second quarter. Touch wood, famous last words. Look, I think a lot of it'll depend on where this tariff discussion lands, because it's the tariff situation coming out of the US government has changed a lot in various directions, up and down, changes very quickly, depending on how quickly you read Truth Social, it seems. And look, I'll just go back to the impact of the tariffs. The point I made before about the efficiency cost of a tax, if you introduce a relatively low tariff, it's not ideal. It's not something I would just choose for a birthday present, but it's not going to be the end of the world. If you choose to introduce 80%, 120% tariffs with uncertainty of when they're going to come and go, that is going to cause massive havoc in the economy. And so it looks like currently it's still the 10%. I think that's the only ones that have been locked in. So a lot of this now is the uncertainty with the rest. If you could put the uncertainty to bed, it may be possible to unscramble that egg. But if Trump wants to continue going down the path of 80% tariffs or whatever it is that his more protectionist advisors have suggested, then it could get messy.
Yeah, well, I mean, isn't it the case that the pause that he announced when the bond market crashed in April, and then he said, "Oh, hang on, we're going to have a pause for 90 days." That 90 days is coming up soon, isn't it? So they need to, yeah. So
yeah, like I said, we just don't. I mean, the uncertainty itself is a cost, right? The political risk premium is a very real thing. It's you can't point to it with a physical substance, but it's a very real thing. People are less willing to invest if they think that the market they're investing in could radically change next year, right? I mean, you need to have some certainty to make your investments make sense. So the risk is itself a concern, but then also there's the concern of the tariffs aren't just a tax on imports. Any tax on imports is also a tax on exports. So the entire American export industry would be waiting with bated breath to see if they're going to get slugged. But we just don't know yet. So
exactly. So should I go on to some other news, John?
Please do.
One of the other bits of data I've been following is Australian dwelling approvals, because we've got this national housing target whereby governments across Australia agreed to, they're not going to build them. I mean, this is why the whole idea of a target was silly in the first place, because the governments aren't directly going to build all these houses themselves, but they committed to a target of 1.2 million new well-located homes over the 5 years from 1 July 2024 to 30 June 2029. Now, 1.2 million new homes is over 5 years is 240,000 new homes per year. The problem the government's got, and this is all governments because they all committed to this target, is that if you look at what we've been constructing and what we're approving, what dwelling approvals are in the pipeline, we're going to fall well short of that. Over the last 12 months, and we're now 12 months into the target. So we've had the first year of the target. We've only got about 6 months of data on completions. They look well below where they need to be. And the approvals, which are the leading indicator, which I've got up here now, they're showing that the pipeline really isn't expanding. We're not going to see this huge surge in dwelling completions. Up till the end of May, we've had a bit over 180,000 dwellings approvals. So approvals of houses and apartments and townhouses. And that's well short of the 240,000 that's needed. So we are not going to, there's no at this rate, we won't achieve that 1.2 million new houses target, which is what all the state governments and federal government agreed is required to be able to match the population growth, or to and also to improve affordability by providing some additional supply in excess of that population growth to an extent, or what's needed because of population growth. So look, we're in a bit of a mess really with housing policy. We're just not building enough dwellings to improve affordability. We're continuing to have significant population growth. We're going to have new policy measures, including the Home Guarantee Scheme expansion at a federal government level, which will, add to demand in future years, which means it's going to mean higher prices. We've also got lower interest rates that are going to contribute to that too. So it's a real diabolical issue, this housing, and the data are incredibly concerning. So I thought that was another interesting bit of data that came out this week.
Yeah, am I right in thinking in the Queensland budget, the Queensland is now echoing the old federal Labor policy of the government buying 25 or 30% of people's houses to make houses a bit more affordable? That's I think I saw that announcement.
They've got a home equity scheme, and look, I think it's a trial, so it's around 1,000 or so places over 2 years. So yeah, I mean, I guess governments have to, there is a real concern about housing affordability, and I don't have a problem with them trialing out, trying to do something a bit different, given that there's certainly, there are a lot of people who are locked out of the market.
Well, that's true.
Yeah, I think one of the big issues is the supply side. I mean, the real issue, or what seems to me to be a big constraint, is just how difficult it is to develop anywhere, and also the high cost of construction. That's where I'd be focused on. But yeah, I mean, to some extent, government policy, government schemes on the demand side are going to be adding to demand. There's no doubt about that. And you could argue.
Yeah. I don't think you'll disagree. I think it's a tripartite issue. There's probably more than three, but I'd wrap up three big bundles of topics. One is the demand side, just the amount of people coming into Australia. And the demand side isn't just the number of people coming in. It's also, I haven't seen this unpacked as much. I'd be fascinated to see if it makes much difference. The average number of people living per house, the square meters per person, the number of people living per house is going down. The square meters of a house needed per person has been going up. So that also is contributing to on the demand side.
Yes.
So that's something to unpack. But anyway, the demand side can't be ignored from this. But on the supply side, there is the building costs, which I think is often zoning laws ends up becoming the center of an economist's focus. And that is the third one I'll mention in a second. And so it's relevant. But even if you fixed all the zoning problems, those building costs are large. And we've got governments of all persuasions pulling in all of the building resources to build their boondoggles and their infrastructure and everything else they want. There's a finite number of those builders out there. If they're being all sucked into the working on public sector projects, they're not there to build houses. And also related to the cost of building is just the number of rules and regulations you have to follow. I mean, you're not allowed to build a house at low standard, and everyone, they hear that and they think, oh, of course you wouldn't want a low standard house. When I say low standard, I mean the standards that existed when you or I were young, dude. I mean, they used to be possible to just chuck up a shack that you can live in and improve it as you went. Now that's not possible, right? The bottom rungs of the ladder have been knocked out, so that it's just the standards have been put up and up and up, which is great if you can afford them. If you can't afford them, the option would be to have nowhere to live or have a crappy house. And we're making it illegal to have a crappy house. So that leaves only the option of having nowhere to live, which isn't, to my mind, obviously a better choice. So that's all the costs of building. And then the third one is the zoning. And I got to say, with the zoning issues, to some degree, some part of that I think is an intractable problem, because people who buy into a suburb that is then now being successful and the prices are going up, you could say, oh, great, the prices are going up, knock all the houses down. But to some degree, when people buy into an area, they're buying into it for the amenity to some degree, right? So you think about a block of units or something. When you buy in, you also buy into the body corp. The body corp sets the rules and guarantees a certain amenity. There is there is a real trade-off there, where if you tell people we've just got to knock all the houses down to build high rises in the city centres, you're making it impossible for people to do a long-term investment in what their housing is going to look like. You're taking away that right on people. So if everyone wants to live close to the city centre, and that's the other issue, there is only so much land close to a city centre. So if everyone wants to live close to the city centre, it's kind of unavoidable that the more people come in. If everyone has that same demand, they're not building more area close to the city centre, really. So that's going to be pushing up price. So we're going to have to start thinking about, I think, regional development if we want to talk about increasing the access to land. And that requires us really seriously looking at the role of local governments. I'll just end with my provocative statement then. I think a part of the solution, a big part of the solution, would be abolish local governments. And I think that would radically relax.
That is provocative. John, why I'm surprised. I mean, I know you'd probably agree with me on this, but I mean, isn't one of the issues, like I thought you might have mentioned it, one of the issues is an ill-defined property right, isn't it? I mean, you're talking about people buy into an area and they've assumed there's a particular level of amenity. So they're assuming they've got a property right, or a right to a particular type of amenity. But that is not a very well-defined property right. I mean, it's regulated by zoning, but then that's subject to political debate, isn't it?
That's right. My flippant comment of get rid of local councils isn't unthought through, right? My suggestion would be you replace it with neighborhood-based body corporates, because I think the units have already shown us a path forward here. The property rights instantiated in body corporates, if you own a townhouse in a block of townhouses or a unit in a block of units, you know what rights you have, right? You can just look at the rules of the body corporate. Can you build this extra thing here? Can you have these pets? Can you paint your house purple or whatever you like? You're not guessing at your property right. You've bought into something that is part of a body corporate with a system that you know how to follow the rules to follow. So you could buy into some neighborhood body corporate. I would argue this is what I'd prefer to see. You buy into a neighborhood body corporate, and all of those rights are instantiated. You can see exactly what they are. You're not voting for a distant bureaucracy to potentially change a zoning law. You've actually got that property right written down in the constitution of that body corporate. So I would still have a system of coordinating property, but I think the current model of local councils it only really does two things, right? It builds parks and roads and a few things like that. They're very simple things, and it stops development. And quite frankly, building parks could be done by any old state government bureaucratic hack. It's not that difficult. That can be managed by someone else. So really the only quote unquote value add local councils are doing is stopping development on the basis of a system that no defined property rights for the people who are involved. So put that aside, and then instantiate the property rights in a neighborhood body corporate style system. We know it works because body corporates already work. But anyway, that's my pitch.
Interesting concept. I mean, I'd like to see, I wonder if there's any examples of a Coasian solution to this issue, John, because, I mean, if you think about it, I mean, if someone's got the option of redeveloping their property and they're going to get a ton of money, they can sell it to a developer and redevelop, have a block of flats or a high rise on it, then there should be a deal that they can do with local residents. I mean, within the community of concern. I mean, who are the people who are really affected by this? And I mean, could you actually buy them out in a way? Could you make some, could you actually say, well, we'll share some of the gains with you, and then so you don't complain about this actual development? I think it'd be good to, but then again, I mean, it's like, who are the people you have to do the deal with? You see, it's unclear what the property rights are in that case. So I think that's probably getting back towards what you're suggesting. You want to make that clear, and you could do that with a local body corporate. That's an interesting idea.
Yeah, I think that's exactly what you could achieve with neighborhood body corps, and then and you have that situation now where you've got certain rules for everyone in a body corporate area, but someone could go in and say, look, I'm offering this much above market rate, and if enough people agree in that, fully legal structure that everyone knows what they're buying into, then it can be done. And if they don't agree, still property rights. You can say no.
Yep.
So, but anyway, we're
right. No, property rights solve a lot of problems. Clear property rights. Absolutely.
Did you have I took down your slides. I'm not sure if you had another one or.
Well, the other thing I wanted to talk about, John, but there's another comment from Peter we might want to deal with if you want to about limited zoning also leads to developers aiming for a higher priced market, making it harder for people to get a start in the housing market. Yeah, I guess that makes sense, doesn't it? I think that seems reasonable. I mean, the lack of supply is increasing prices. So, yeah, definitely going to make it harder for people to get into the housing market.
Yes, and then that has to be, that just goes back to the earlier issue before because I have a bit of an unconventional take on this, the relaxed zoning, right? So I understand the argument. It's very Econ 101 and it makes a lot of sense. Just relax the zoning, build more, have more houses, prices down. There's nothing wrong with that argument. I just go back to, if you did have that body corp style system, I don't think there'd be infinite development. I do
agree.
think the people that bought into an area need to have some way to enact the implicit, or I would make them explicit, property rights to the amenity or some sort of access of control of a legal structure to be able to weigh the increased value you get on the land if you just built a high rise with lots of units versus the actual value you put on that not being the case if that's where you live. I also note the incentive structure. If you're building neighborhoods and you want the neighborhoods to be good, to some degree, that the appreciation of your house, the appreciation of the land you're living on, is a reward for running your neighborhood so well everyone wants to live there. And that goes to incentives, right? I want there to be an incentive. There should be a reward for running a city so well everyone wants to live there. And I worry about the incentive structure as if a group of people get together and ran a town so well that everyone wanted to move, and then you told them, because you ran it so well everyone wants to go there, you have to change everything about it to let everyone in. We're kind of punishing them for the crime of successfully building a desirable town. So what I'd like to see is more opportunities to copy successful development, which is to say, I'm far more interested in building out than building up. I want to see more greenfield developments. I want to see more new towns being built. I want to see more developments on the periphery of towns and periphery of cities. And those greenfields, I think, should be able to have a bunch of people come together and do an experiment in building a new successful town. Copy those places that are currently valuable, are overpriced. If they're overpriced, that shows everyone wants to live there. Copy what they're doing and build it somewhere else, and you can have lots of desirable places to live instead of just everyone in Australia trying to live within 30 minutes drive of the same 5 CBDs. And that's 5 if you count Adelaide as a real city, which of course Adelaide is a myth made up by people to scare children. But if you think it's a real city, then there's 5 CBDs.
It has a very good theatre there, John. I'm not going. I won't. We won't have an argument about Adelaide, but I quite like the place. We talked the other week about having Townsville as a capital of North Queensland. I think we can have more. We can have new states. We can try and get public servants out of Brisbane, Sydney, Melbourne, put them in other cities. My friends in the Pirate Party have this or the Fusion Party have this concept of the Turing city. Have you heard about that? A charter city named after Alan Turing. I think that's an interesting concept that we could kick around in a future
Big
episode.
fan of charter cities. Charter cities are a great idea. We should make that more possible.
Yeah,
the comment coming in here, what about modular homes? Yeah, the modular homes come down to that issue before about all of the rules and regulations about what sort of houses you're allowed to live in. But yeah, if you were just if it was more easy to be able to just live in whatever you were willing to live in, then some sort of accommodation would become cheaper. It wouldn't necessarily meet the standards that everyone's hoping to meet, but a house is better than not a house, in my opinion.
I think it's part of the solution. The big constraint to me seems to be, though, the availability of the land. The land is what's really scarce, isn't it? The well-located land. That's what where the scarcity is, and that's what's driving up property prices. So I think modular housing can help to an extent, but it's the land that's the issue.
Well, I think the land is an issue. I said before, I think it's a tripartite. We come at it 3 ways. Okay. I think it should be the demand, the land, which comes down to the zoning or the land availability, and the building costs, which I think is often underestimated as a relevant impact here, because the cost of actually just building in this country right now is eye-watering. And that's partly caused by the fact that we just require it to be. The unions have a stranglehold on on some of those industries, and they're able to drive those prices up, and the standards are such that it's hard to have cheap, shitty houses these days. Not that anyone wants the shitty houses, but it's better than not a house.
I agree. Righto. We've got some other good comments here. Lyndon is skeptical about your body corporate idea, John, having seen some crazy body corporates. Very reticent to buy into it.
As have I. I've seen some. I've been a part of some body corporates that are pretty ridiculous. But then I've also, at some stage, just got active, joined them, and you can make a bit of a difference that way. But it's much easier to be able to make that difference because it's much more localized. You could knock on doors with your neighbors and actually make a difference with the people you know living in the area with a shared interest in getting something done. That's, in my opinion, much more doable than knocking on enough doors to change your state or government or the Brisbane Local Council government. The other thing is, if you decentralize to neighborhood body corporates, there would be a bunch of terrible ones. There'd be a bunch of great ones. You would be able to go shopping, right? So before you build a house, I understand if you're currently in a house that's you don't necessarily want to be choosing to change houses all the time, but some people would be. And when you're looking for a place to go, you could read up. This is the same argument as charter cities, right? You look at the rules of the charter city and decide which one to join, which one to invest in, which one to live in, which one to get a passport in. And I think that case for charter cities makes a lot of sense. The same with these neighborhood body corporates. You go and check what their constitution is, check the nature of the people they're already on the board, check what rules they've had, check what rules they've changed. And you'd be able to then pick the area that has a body corporate that most matches your preferences. Because, of course, we all have different preferences as well. Some people might want a really strict body corporate that just never allows development. Other people would want a very lax one. And if you had enough body corporates, there'd be enough diversity, and then you'd have the competitive pressure. So this is then the second degree benefit from this. The first degree benefit is you've got more options and you can choose the one that matches you the best. The second degree benefit is that now you've got competitive pressure where those body corporates that are run the best would be attracting more people wanting to live there. The price is going up and it's just a more successful place, and the people in that body corporate will be benefiting more. So then other body corps are going to be looking over and going, all right, what have they done that's worked so well? Oh, they did that and that and that. I will copy it. So you have this competitive pressure. And this goes back to like competitive governance. The whole reason I think competitive federalism works is you have this competition between jurisdictions. And in my opinion, that is the only institutional driver of better governance long-term, is to make sure there is that competitive pressure. Because I don't think we can vote our way into better government. I think we can only compete our way into better governance.
Interesting hypothesis, John. We'll have to chat about that one in the future. I'd like to hope we could vote our way into it. I'd like to still believe that there's some value in democracy, but I agree competition between governments is a good thing. I think that I'm not going to disagree with you there. Also got a comment about high-speed trains. We'll need some high-speed rail.
Well, yeah, that's a reference, I think, to the idea of regional towns. So then the infrastructure improved to get there and back. Look, there's a good case for that, especially as things currently stand. If you assume all the economic activity has to remain in those 5 CBDs. But if you created other CBDs that were actually desirable, then you don't necessarily have to be able to rush to Melbourne every week if you're from Brisbane, because Brisbane is desirable enough. If we could make Townsville or Mackay or Maryborough desirable enough, then. But yes, improving infrastructure is, but that's true with all of these scenarios, right? If you build up in the middle of big cities, you're going to have to improve that infrastructure to allow that many people to live on top of each other. That's a lot of infrastructure you need. City, that's a city-focused infrastructure. I guess in basically agreeing with, is it Gardo here? In basically agreeing, I think infrastructure should have less of a bias towards the cities and more of a bias towards connecting cities. So I think that goes to high speed. I don't know if high-speed trains is literally to Geelong Bendigo. I don't know if that's literally the one to do, but the general idea of where infrastructure should go, I notice there's a very strong bias towards infrastructure building up the same 5 CBDs. I don't agree
Cross
with
River
that.
Rail and our Brisbane Metro here in Brisbane. John, I've just noticed we're nearly, we're at an hour now. You want to talk about Medicare. Should I just foreshadow a conversation on bailouts that we could have next week before we jump into Medicare?
Yeah, you do that and I'll bring up the right form in the background.
Yep. So the other issue I wanted to, I think I'll just foreshadow it now, is that I think in the coming, well, it could be as soon as this week, there'll be a deal with the Neostar, the multinational that owns a couple of smelters here in Australia, to keep them running, because there are concerns about rising energy costs and also what's been happening in the national markets, and that's been compromising their viability. And I think what we're going to see is we'll see state governments do it and federal governments providing assistance, financial assistance of some kind. There's also the Tomago, is it a smelter or is it, I'm trying to remember, a refinery in near Newcastle that is also at risk, and the New South Wales government is in talks with them. I had a nice graphic up there from the Financial Review that I borrowed, although we could get a copyright strike if we put it up, so maybe we don't do that. But they had a good summary of all of the smelters and refineries that are at risk across Australia. I mean, in places like Townsville, Port Pirie, Hobart, and all over the place. So I think there are a lot of concerns about the rising energy costs and what that means for heavy industry. And now I think, instead of fixing up the policy, instead of improving our policy settings so we get cheaper energy, rather than be on this crusade to be world leaders in decarbonising, even though the rest of the world isn't, or large parts of it aren't, and we're imposing all these additional costs on us, and that's going to cost us a lot of heavy industry. And so what we're going to do to offset those costs is we'll have bailouts, we'll have financial assistance of some kind, and the taxpayers are going to have to bear the cost. So what we'll see in coming weeks is a lot of really bad policy to bail out businesses that we shouldn't have to bail out if we had sensible policy settings in the first place.
All right, we're going to. I was doing something in the background, so I listened to half of it. What I listened to, I agreed with. But are we going to come back and dive into that next week?
I think we should dive into that next week. What do you think?
Yes, yep. We've come up to the hour, which I normally try to wrap up, but I did want to cover one other thing. But I do note we've dobbed ourselves in for a lot of topics for next week, so we should keep notes here, because
Tobin
next
tax,
week's already written itself.
Tobin tax, charter cities, smelters and refineries, bailouts, that sort of thing.
And productivity to debt.
Yeah. Okay. We've got enough for the next month or so.
Yes. And another suggestion. There we go. Next week we're going nuclear. So the last thing I wanted to mention,
cost discussion. Yeah, go ahead, John.
Yeah, well, especially in the medium term. I mean, nuclear is not going to change the short term, but it's the short term is actually a genuinely difficult problem, because we're suffering the consequences now from bad policy over the last couple of decades. And you should change the bad policy to make it better policy. But just like turning the Titanic, it doesn't mean because you've got the right policy today, energy prices will go down today. We're going to keep suffering the hangover of the bad policy for the last few decades. And then if we want immediate relief, we're going to have to think innovatively. But maybe that's worthy of its whole show. We should bring on the CIS expert on energy and see what we can do, unwrapping that. But since we've hit the hour, I do want to touch on we've got a new campaign coming out from ATA, the Australian Taxpayers Alliance, Medicare 10, I'm calling it. It goes to the fact that, and I'm not sure if you'd know this, Gene, we've probably discussed it before, Medicare Levy. Most people, what's the rate of Medicare Levy in Australia, Gene? If you can play my guinea pig here.
2%.
2%. And everyone thinks it's like a flat 2% tax. It is not a flat 2% tax. That is not the way it works in reality. And economists care about the marginal rate. And the marginal rate for the Medicare levy is it's 0% up to 27,000. And then from 27,000 to 34,000, the Medicare levy is 10%. And then above 34,000, the marginal rate is 2%. So we've actually got three rates of Medicare levy, 0, 10, and 2. Now, if you're above 37, it works out that it's also your average rate is 2%.
John, so that's can you just explain how is the marginal rate 10% from the tax-free threshold to what was it, 30 something thousand? Can you explain how that works?
Well, that's just the policy they've written in, right? So they say it's a 2% flat tax, but then they've carved out a tax-free threshold up to 27,000, and then they've got a bracket between 27 and 34 where they claw back that tax-free threshold, and they claw it back by charging you 10% of your income for each dollar earned between 27 and 34,000. So the honest way to describe this, if the tax office was a bit more honest, would be we have three rates: 0, 10, 2. Instead, they describe it in a way to ensure as few people as possible understand it by saying, oh, we just got a flat 2% with this carve out to make a thing tax-free, and we claw back the tax-free. But clawing back the tax-free threshold is exactly equivalent to having a 10% marginal tax rate for the Medicare levy. If you earn from 30 to 31,000, you will pay that 30 to 31,000, you earn $1,000, you will pay $100 of that 1,000, 10%, towards the Medicare levy. So that, and it's the marginal rate that determines incentives. So for boffins like me, constantly looking at the incentives that come from our tax and welfare system, if you notice this sudden 10% jump in marginal tax rate, it's noteworthy, and more than noteworthy, it's stupid. We have a 10% marginal tax rate that applies to some of the lowest income people in our country, which adds to everyone's tax burden. It significantly hurts their incentives. And it creates a regressive step in our tax system. And I can show this here by chucking up there it is here. This is the actual tax rate. So if you look at the tax rates that are given to us by the government or by the ATO, they'll say you have 0, then 16%, then 30%, then 37%, and then 45%. That's the official tax rates. And that looks nice and normal and progressive. You see on this graph, on the x-axis down the bottom is the income earned. The y-axis along the left side is the percentage, the marginal tax rate. I'm talking marginal because as an economist, I'm interested in the incentives, and marginal is what matters. And people just assume it goes like this, nice and normal step up like they say it does. But when you factor in, there's two things factored in here: the low income tax offset, that's not what I'm talking about today, and the Medicare levy. And a lot of people think, oh, if you add that in, you just add 2% to everything. Not quite. Right? You add 2% to most people, but for people earning from 27 to 34, you can see that castle at the beginning of the tax schedule, where it goes up to 16%, and then very soon after going up to 16%, it jumps up to 26%, and then it goes back down to 18%. So you've got this little anomaly of our tax system caused by this 10% Medicare levy bracket, which I think only exists because not enough people know of it. If people knew of it, they'd go, well, why? Why would we be doing this to low-income people? If you want to have a tax-free threshold, and I'm all for that, have a $27,000 tax-free threshold, and then just make it marginal 2% from then on. And then John, get rid of this little...
Yep. Yeah, so who's going to be affected by this? I mean, this is going to be largely part-time and casual people, isn't it? So, I mean, yeah, it actually could... I guess it actually could affect the incentives to work an additional hour if the tax rate is if there's an additional 10% onto your marginal tax rate. That's extraordinary. I must say I didn't appreciate that.
The other thing you have to remember, I put up here the tax rates. Of course, the actual incentives to work are determined by both the tax rates and the withdrawal of welfare. So if I put up the effective marginal tax rates, these people that are being affected here, they're often on about 80% EMTRs, effective marginal tax rates. So there's already a massive disincentive for a lot of these people to work. And then part of that absurd 80% effective tax rate is the fact that we've just got this extra 10% Medicare levy that no one knows about. And it's not just does it harm the incentives for those people, it's also just an extra $500 tax for everyone, but also it creates this regressive step. So everyone thinks progressive: as you earn more, you pay a higher marginal rate. You can see here, as you earn more, for some people you earn more and now you're paying a lower marginal rate, which is a regressive step in our tax system, which no one is actually arguing for. We've got this accidentally. The only reason we've kept this is that most people don't know it exists. So the Australian Taxpayers Alliance, our campaign now, is to encourage the Labor Party. They say they're interested in productivity. They want productivity reform. Jean, you and I have been waiting for our invitations to come along to their productivity talkfest. This is what ATA is putting on the table for Labor. This is a very bite-sized, achievable, Labor-friendly policy, right? This is cutting the marginal tax rates on the poorest people. It's making our tax system more progressive, taking away the regressive step. I would have thought, and it boosts productivity by giving tax cuts to poor people. So I would have thought if Labor is halfway, anywhere near serious about tax reform for productivity, this is a very Labor-friendly tax cut that I think makes a lot of sense for them to look into. So ATA is going to be pushing this. Often we write policies that we expect are more likely to be picked up by the Liberal Party, to be honest. This one is very much targeted at, let's take Labor at face value when they say they want productivity. Let's assume they mean it. Let's write a policy that fits their agenda. So we're going to be, and I ask you at home if you're interested in this, if you're looking at this, if you agree, if you know some Labor MPs, if you have a local Labor MP, send them this or go to the ATA's website, taxpayers.org.au. It's our latest campaign. So it's taxpayers.org.au/Medicare 10. Show them this information. We're going to have a discussion paper coming out, unpacking it in a bit more detail over the coming weeks. We'll be in touch with the Labor MPs ourselves. Let's see if we can actually get a bit of good tax reform coming out of the Labor government. And this would, the benefits of this, improve incentives and therefore productivity from these people over that income bracket. It would provide everyone, or nearly every worker in Australia, with a $500 a year tax cut. So that's always a good thing. And it makes our tax system just more logical and progressive, taking away this regressive hit that is there for no good reason. So 3 very good benefits, and it's quite achievable inside the budget. It would decrease revenue, but it would only decrease revenue by a couple of billion a year. Now, that's a big number for you and me, but you got to put it in the context. The government does things costing a couple of $1 billion a year all the time, and this would be something they're doing that's actually good for the economy and good for the taxpayers. So I think it's very justifiable reform. If you agree with me at home, please join the campaign. Go to taxpayers.org.au, get involved with us, and share that around to everyone you know who are interested, especially anyone you know who's associated with the Labor Party. And let's see if we can get this done.
Yeah, John, well done for picking that up, mate. I mean, I'm embarrassed I didn't know that. It's quite extraordinary.
Very few people do.
Yeah, when you see it and what that means for the marginal rates. Yeah, very wacky.
Yeah, most people just don't think in marginals. So it's and the way they write it up, it's almost written up in a way designed to ensure that people don't include it in the proper tax rates. Well, another bugbear of mine is they should just release the actual tax brackets. They should actually, this should be in every budget, in my opinion. They should be required to release the actual tax rates in every budget. If people saw it every year, I think the political pressure would grow to fix it. It's the lack of awareness that leaves it in there. In my opinion. So I'm glad to hear I've got you on board with the campaign, Gene. So
absolutely. I'm fully on board with that. That's wacky. That's just something you hear and you think that makes no sense whatsoever. And surely, like, no one would have intended to have that impact. I mean, I don't know how we ended up with it like that. I mean, did someone maybe
it's a clawback, right? They wanted to add the tax-free threshold, and then they thought, adding the tax-free threshold costs the budget too much. So why don't we just claw back the tax-free threshold? And anytime you claw back a benefit, you are adding to the effective marginal tax rate. And if it's not written down clearly in a graph, policymakers just disregard it.
Yeah, but can they claw it back over a wider range of income, or is that you don't want to do that?
I mean, they could do that. They could claw it back at, say, 4% over a bigger range. That would still increase marginal rates on somebody by some amount. And then eventually when you stop clawing it back, you'd still have this regressive little downward jump. But I would say the easier argument is just keep the tax-free threshold, but just make it cut in at 2% marginal from then on. Or even better, just roll the Medicare levy into the income tax, since it's just the same thing with a different name, right? So for some reason, everyone's scared of that idea.
Yeah, I like it. I just want to respond to a comment from Lyndon. Lyndon, I have some doubts about CIS. Aidan Morrison might be better. I think Aidan actually is at CIS, so I think that's who you were probably thinking of, wasn't it, John?
Yep.
Okay, good.
Talk about nuclear and energy from CIS.
Yeah, and Peter had a good comment. High wage and high energy cost economy doesn't work. Okay. Yep. I think that's, I mean, we relied so much on having cheap energy for a long time, and that covered up for some other issues we had. But we were able to have heavy industry supported by that cheap energy, and now we're losing that advantage. Okay, then finally we've got Melissa who's commented, or it's just government. When do they ever consider consequences beyond the next election cycle? Yeah, good question.
Yeah. Well, you get this a lot, the silly impacts of dumb policy on the effective marginal tax rates. And the topic is so weird, quirky. I mean, who focuses on this besides weirdos like me? And then when I talk about it, by the way, this issue, I've been saying this for years. I guess I've never found a way to say it that gets people to listen to the end of the sentence, because it is, I admit, a boring and weird topic to come into. Once people hear it, they nearly always agree with me, but just a lot of people don't pay attention to the nuance of how removing benefits impacts the effective marginal tax rate. But anyway, so now that I've got at least the people watching this at home and Jean on board, nothing can stop us now. So we've gone well over the 1 hour mark. So Jean, thank you again.
Pleasure, John. This was good fun.
It was indeed. And we will be back next week, 7:30 p.m. On the Thursdays, simulcast Facebook, YouTube, and X. I'll get one last plug in for taxpayers.org.au. Check out our campaigns there. If you like what we're doing, consider becoming a member. And if not that, please at least jump around on the social medias on X, YouTube, Facebook. Give us a like and a follow. That's free for you, and it helps us. So please consider doing that if you're watching this at home. With that said, thank you all. Jean Tunny is my offsider. I have been and still am John Humphreys. I will see you all next week.